As we approach December 2025, investors are seeking opportunities that combine strong fundamentals, growth potential, and what the experts are saying are good buys right now. So I've curated a list of 7 stocks, which I'll be going over 5 in this video, that have caught the attention of leading investors and different experts around the internet, analysts, things like that. And these are stocks that are rated as a buy among these popular investors in a weak environment like it is kind of right now with this pullback that we've been having in the last week or so. And these stocks span multiple sectors and offer kind of a diverse exposure to several different industries as we go into December 2025. So my name is Pierce. I'm the founder of investorwaves.com, where we track 250 plus investors across YouTube, podcasts, and newsletters to surface actionable trade ideas. And with the top 10 investors on the platform that we tracked, we're currently sitting at a 17% portfolio return just in the last few months of the platform being created. And so we are tracking a bunch of different investors. Go check out all of the stock ideas on the website here. But with that being said, let's get into the 5 stocks to buy before December 2025. And by the end of this video, you'll know what these 5 stocks are, which is my favorite stock of the bunch, and then we have 2 more stocks in the article to make 7 that you can get in the link in the description below and go see those other 2 stocks. So getting right into it, the first one is going to be the Trade Desk, ticker symbol TTD. So the Trade Desk is currently sitting down about 4 to 5% today as the market is closing here. It's down 7% in the last 5 days, and it's been a bit of a rough month for Trade Desk, down almost 20% in the past month. But you kind of look at this dip as a potential buying opportunity, and what investors like Zip Trader and Parkev to Devotion here is saying about TTD. Basically, they are saying that the Trade Desk is trading at under a 70% discount from its highs, which were reached about a year ago in December of last year. And we're starting to hit some key support levels, which could be a potential good place for a buy. You can see it's basically lost here on the weekly time frame. All of the EMAs and SMAs that I track from 9 up to 200, it's kind of lost all of those at the moment. Those are the indicators I track on the chart, and so you don't really have a risk of falling to another indicator unless you put on a different indicator, but these are the ones I track. And so as it kind of bottoms out here, it could be a potential area of support. You can see in April when the stock was crashing, it found support at this $40, 40-ish, low $40 a share mark, and it's finding that right now here as well. So if it can dip back above one of these indicator lines, it could be a potential good opportunity. As you can see, I mean, at one time it traded 12 months ago at $140 a share. So it has been a cyclical stock. You can see the ups and downs, but according to Zip Trader here, the current drop has much more to do with this market fear in the air around obviously the rate cuts and the data that was missing from the government shutdown. And it's not really necessarily reflective of where the Trade Desk is at in terms of long-term fundamentals. And he's saying with a major holiday catalyst and digital ad spend trends coming in here in obviously Q4, you got Black Friday and all those things, he believes the Trade Desk is a very solid buy. So that's going to be stock number 1, the Trade Desk. Getting into the second pick here is going to be Chipotle. So Chipotle has also been finding itself with some issues. Obviously, it's down again, down 3%. But in the last month, down 27%. And it's kind of been the theme of consumer stocks in general having a rough past few weeks. You know, thinking of stocks like Duolingo that had the big crash. Even after showing some good numbers, it's just kind of the sentiment around these consumer stocks. But here we have Everything Money talking about how since Chipotle is trading near this 52-week low, there could be some long-term upside as it kind of potentially bottoms out. And we can go look at the chart here for Chipotle as well and see how the indicators are playing out. It's also trading well below all of the indicators, and you can see currently at $30 per share. And this is kind of the area where it would just be completely kind of underpriced if we were to find where it was back in May of 22, right there on those lows, $23 a share. If it gets there, that would be crazy. But basically, when people hear that a stock like Chipotle is down, this is what Everything Money is saying. They may get nervous, maybe something's wrong with the business, but he says that price and value are always two different things, and it's still one of the most successful fast casual brands in America. They're planning to expand internationally, and he is thinking the fundamentals still remain solid. There has been some quality control issues with Chipotle, which could be a kind of determining factor in why one of the reasons why this stock is down. So that's something that management really needs to dial in if they're going to get back to providing an experience that, you leave the restaurant and you're happy with. Because if you go there, you pay $15, $20 for a fast casual meal, the portions need to be right. And that's just kind of like, the first step in getting this thing turning around. So they face the consumer headwinds, but just like the first stock, there could be a place where it finds consolidation. It starts to find support under some of these indicators, and it could be a potential buy here going into December as it finds support. So that's the second stock to keep your eye on. As we go into the third stock here is going to be Nebius Group, an extremely hot stock here in the AI and cloud infrastructure space, an emerging technology company. And this is another stock that is down here 25% in the past month, right? It seems like a theme of these investors kind of tracking which stocks are being pulled back and are an attractive dip buy opportunity if they can find consolidation. And here's what Jose Navarro said is basically in the near future that he's going to start moving into Nebius because Goldman Sachs actually increased their price target on Nebius from $137 a share to $155 a share, citing the raised recent guidance for 2027. So that is a potential catalyst for Nebius, and we can go look at the chart. As it was kind of dipping back from the recent highs of up to $140 a share, it has found a lot of support here around the $85 a share level, which was absolutely necessary for this name, because if it did not hold here at about 85 and it's still holding, there's a lot of room to kind of crash down to this $55 a share level where the other simple moving averages are on the longer time frame. So that is a bullish sign that there's buyers stepping in as it pulls back, and hopefully the AI kind of sentiment, the bubble sentiment, the whole capital expenditure sentiment, maybe hopefully that can kind of rejuvenate here in the next few weeks going into December, and it can hold this indicator, and that would make it a attractive buying opportunity for NBIS. And there's other investors like Jerry Romine who's coming in and saying that he is bullish on the stock for a number of reasons, some of those being the sustainable growth and the margin discipline. They have gross margins up to 70%, they have cost control, and obviously their revenue has exploded up 355% year over year. So that is going to be the third stock. Getting into number 4 here is another kind of AI adjacent play here, ticker symbol MU, which is Micron Technology, another name that is kind of trading sideways a little bit down past 5 days and then up, actually the first one we've had in this video that has been up 20% in the last month. And here is a call on this stock based on a recent DCF model reassessment. And this is here from Parkev, and he's saying that he ran a proprietary discounted cash flow model on Micron technology, and he says it looks fairly valued. It doesn't look cheap, but he updated his model and the intrinsic value per share nearly doubled, and compared to what his calculation was a few months ago. So given the current market price, which the current market price is about $241 a share, we'll type in this ticker here. He's saying, given the current market price and he applying a margin of safety, that at this level the stock looks fairly valued based on his DCF calculation, but you have a stock that looks undervalued based on the market multiples method. And so he thinks the company has many tailwinds working in its favor, and he's re-rated the stock to a buy just a few days ago here in the middle of November. So kind of looking at the ticker on this one, obviously just a massive run up since September. I mean, pretty much doubling in just a matter of months. And it is trading, I mean, look how beautiful this chart looks. It's trading well above any indicators. Even the 9 weekly here is down $30 before where it's sharing. So it is down 2% today. This could be, more of a broader market sentiment, but it's a very strong company, a very strong name, positioned to continue to benefit from the AI and data center growth. So getting into the last name here is going to be AMD, another powerhouse in the AI space. They are down 3% today and then kind of trading sideways in the last month, but they kind of had the explosive run when they partnered with OpenAI and that came out, but kind of trading a little bit sideways since then. But here's some kind of commentary on the stock from a few investors in the space, and they are saying to buy the dip, that they are bullish on earnings and offering price targets. So the current price is $240 a share, and kind of a short-term price target for AMD is $247 a share here from Daily Podcast Reportings, and another one from Jose Navarro. He has it at a $600 per share price target, and he is extremely bullish on the stock. He says that AMD projects about $20 in earnings per share by at least 2030, and he personally believes AMD is extremely cheap. So if you kind of look at that $20 earnings per share and you give a normalized PE ratio for the semiconductor industry, looking at other semiconductor stocks of about a 30 multiple, that's a price target of $600 for AMD. So he's extremely bullish on the stock. That is going to be the last name on our list. And if you want to receive the other 2 stock ideas that we have in the article, click the link in the description. It'll take you to the screen, enter your email, and you'll be able to see those and what top investors and experts are saying about these stocks as we go into December 2025. But that's going to be the entirety of the video. Make sure you like, comment, and subscribe. Let me know what you think about these stocks, and I'll see you in the next video.